Have you ever wondered about the origins of our global financial system and its ties to World War II? As it turns out, the roots of our interconnected financial world are deeply embedded in the tumultuous soil of the mid-20th century. Specifically in a small town in New Hampshire, USA called Bretton Woods. In the summer of 1944, a gathering of representatives from 44 allied nations convened with an audacious goal in mind. Their mission was to establish a new international monetary system that would prevent the economic disasters of the past. A system designed to promote exchange stability, economic growth, and high levels of employment. This was the Bretton Woods Conference, a meeting that would go down in history for its far-reaching implications. It led to the creation of two powerful organizations that continue to shape global finance today: the International Monetary Fund and the World Bank. The Bretton Woods Conference, a monumental gathering that forever changed the landscape of global finance. Rewind to the 1940s, a tumultuous time in world history. The world was embroiled in the second deadliest conflict in human history, World War II. Nations were at each other's throats, economies were in shambles, and instability was the order of the day. The global market was like a ship lost at sea, tossed to and fro by the violent waves of war. As the war raged on, the issue of economic instability became more and more pressing. The Great Depression of the 1930s had left a deep scar on the global economy, and the world was still struggling to recover. Inflation was high, unemployment was rampant, and many countries were on the brink of economic collapse. The need for a solution became increasingly evident. In the midst of this chaos, the concept of a unified financial system began to take shape. The idea was simple but revolutionary: to establish a global monetary system that would stabilize exchange rates and promote international trade. The goal was to avoid a repeat of the economic disasters of the past and pave the way for a more prosperous future. This idea was not just a pipe dream, it was a necessity. It was clear that the old system, based on the gold standard and competitive devaluations, was not working. It was time for a change. It was time for a system that would promote economic cooperation and stability, a system that would foster growth and prosperity. And so, the ground was set for what would become one of the most important economic conferences in history, the Bretton Woods Conference. The stakes were high. The future of the global economy hung in the balance. The task was daunting, but the world was ready for change. The conference was a gathering of representatives from 44 allied nations. They came together with a common goal: to lay the foundation for a new global monetary system. They came with a sense of urgency, knowing that the task at hand was of monumental importance. It was against this backdrop that the representatives of 44 allied nations convened. In the summer of 1944, the quiet town of Bretton Woods, New Hampshire, became the focus of the world. This unassuming location was chosen for a critical gathering, a conference that would shape the financial world for decades to come. Representatives from 44 allied nations convened at the Mount Washington Hotel, a grand edifice nestled in the scenic White Mountains. Among the attendees were some of the brightest minds in economics and finance, including British economist John Maynard Keynes and American Treasury official Harry Dexter White. These illustrious delegates were tasked with a momentous challenge: to construct a new international monetary system in the aftermath of World War II. They hoped to foster economic stability and prevent the competitive devaluations that had contributed to the Great Depression. Over the course of 3 weeks, the conference attendees deliberated on an array of complex issues. They debated the merits of fixed versus flexible exchange rates and the role of gold in global finance. They also grappled with how to facilitate international trade and economic cooperation in a post-war world. Out of these intense discussions emerged two groundbreaking institutions: the International Monetary Fund, or the IMF, and the World Bank. The IMF was designed to monitor exchange rates and lend reserve currencies to nations with trade deficits, providing a safety net for economies in distress. The World Bank, on the other hand, was tasked with providing financial and technical assistance to developing countries for development projects that were expected to improve the economic prospects and quality of life for people in those countries. These institutions were not without controversy. Some critics argued they reflected the economic dominance of the United States and the United Kingdom, while others contended they did not go far enough in promoting global economic equality. Despite these debates, there was a shared sense of achievement among the conference attendees. The conference concluded with the establishment of two major pillars of the global financial system: The Bretton Woods Conference had set the stage for a new era in international finance, one that continues to evolve in the face of today's challenges. The Bretton Woods Conference didn't just end with handshakes and departures, it was the dawn of a new era, a seismic shift in the world of global finance that would echo for decades to come. The immediate impact was palpable. With the establishment of the International Monetary Fund and the World Bank, the conference set the stage for a financial revolution. Let's delve deeper. The IMF, a brainchild of the conference, was tasked with overseeing the international monetary system to ensure its stability. It became a financial watchdog of sorts, monitoring exchange rates and offering financial and technical assistance to its member countries. This had a profound impact on the global economy, as it provided a safety net for countries in financial distress, thus contributing to overall financial stability. The World Bank, on the other hand, was established with a focus on long-term economic development and poverty reduction. It provided loans and grants to low- and middle-income countries to fund capital projects and infrastructure development. Its role in shaping the global economy cannot be overstated. It has played a pivotal part in the economic progress of many countries, lifting millions out of poverty and fostering economic growth. But the Bretton Woods Conference's impact didn't stop at these two institutions. It marked the beginning of a period of unprecedented economic cooperation and integration. It established a global financial order that promoted free trade, stable exchange rates, and economic growth. It also created a platform for international dialogue and cooperation on financial issues, fostering a sense of global financial community. But like any monumental event, the Bretton Woods Conference also had its share of criticisms and challenges. Disagreements arose over policies, power imbalances became evident, and the system itself faced significant pressures during periods of economic instability. Yet, despite these challenges, the conference's legacy endures. The Bretton Woods Conference marked a turning point in global finance. It laid the foundation for a new financial order that continues to shape our world today. From the corridors of power in Washington to the bustling markets in Mumbai, its influence permeates every facet of our global economy. The ripple effects of the Bretton Woods Conference are still felt today. Over 7 decades later, the legacy of the Bretton Woods Conference still resonates. As we look around the world today, we see the indelible footprints of this significant conference. The International Monetary Fund and the World Bank, both brainchildren of Bretton Woods, continue to play key roles in the global economy. From providing financial assistance to countries in crisis, to funding development projects in emerging economies, these institutions, despite their critics, have become pillars of global finance. The IMF, often seen as the world's economic watchdog, has the mandate to oversee the international monetary system and ensure its stability. Whether it's rescuing economies from the brink of collapse or providing policy advice, the IMF's work is a testament to the vision of those who gathered at Bretton Woods. Similarly, the World Bank, with its focus on poverty reduction and boosting shared prosperity, carries forward the spirit of Bretton Woods. Its work in areas like education, health, and infrastructure development has touched millions of lives across the globe. But the Bretton Woods system has not remained static. It has evolved over the years, responding to changing global realities. When the system of fixed exchange rates ended in the early 1970s, it marked a major shift. The world moved to a system of floating exchange rates, a more flexible regime which allowed countries to better manage their economies. Today, the Bretton Woods system stands as a dynamic element of the global economy. It has weathered many storms, faced numerous challenges, and adapted. Its institutions continue to serve the world, though the context and the tools they use have changed. The legacy of Bretton Woods is not just in its institutions, but in its vision of economic cooperation and stability. It is a legacy that reminds us of the power of collective action in the face of global challenges, of the potential of well-thought-out policies to create a more stable and prosperous world. The Bretton Woods Conference, a pivotal event that continues to shape the global financial landscape.